Hi everyone, this is Paul Stewart here. Thanks for coming to the SSAS London event. And for those of you who are listening to this who couldn't make it, then you missed a great evening. This is me just quickly whizzing through what I spoke about. I'm going to basically, as quick as I can, focus on the meaty bits, which is the technical stuff. So my name's Paul Stewart. I'm a business and tax planning advisor. I run a number of businesses, but my main one for tax planning is Elite Wealth Services. My mobile number there is on screen. Okay, so let's start at the very beginning. I said I've got a number of companies. So the first one is Elite Wealth Services. We provide business planning support for company directors, people who are in business and are making profits. We look at the company, the shares, look at the family, the ownership, and we come up with strategies for making things as tax efficient as possible. In addition to that, I've got Segmented Solutions Limited, which is a company that is a SaaS provider. We're different to the other SaaS providers. We're not a professional trustee company, but we are SaaS administrators. We set up a scheme for you, and we start off being the administrator. Then you take over. You become the administrator, and we become the practitioners. Now, if you're wanting a SaaS, it's the sort of thing that we do all day long, but there, of course, are other SaaS providers. Don't just think because I'm mentioning it that you should come running to me. There's a lot of other providers in the marketplace who are equally as good. I just happen to have structured mine in a particular way rather than being a professional trustee. Okay, in addition to segmented solutions, I've also got a background in digital marketing and have a separate digital marketing company that does various chatbots, which lets me design little software packages for technical people that I get involved with. So I've learned a lot about stamp duty, learned a lot about VAT and all those sorts of things. In amongst everything, the company that does all the digital work lets me make videos like this one so that you don't have to come all the way to London to hear a few bits and bobs. So I say we work with experts and other companies, one of which is Cornerstone. They're stamp duty specialists. And if you guys are involved in property, it's really, really useful to be able to have a review and make sure you've not overpaid stamp duty on previous transactions. I think there's about 49 exemptions that Cornerstone deal with, and in the last 12 to 15 months, they've reclaimed £15 million of incorrectly paid stamp duty. One of the biggest areas is in the pension sector, because if you have a limited company that owns a property and you're moving it into a self-administered pension scheme, a SSAS, if it's got the same directors as the members of the SSAS, then you don't have to pay stamp duty. Cornerstone will help you with that. We can also reclaim incorrectly paid stamp duty. So if you have a situation that might warrant it, get in touch and I can point you in the right direction for that. In addition to Elite Wealth Services and Segmented Solutions and Cornerstone, I also get involved with QNUPSs, which are qualifying non-UK pension schemes. These are official pensions set up by the Revenue. You do not get tax relief on them. They're not like a SSAS. They're also not like a SSAS in that they don't have a lifetime limit and you can do a lot more with them. We also get involved with EOTs, which are employee ownership trusts. So it might be that the SSAS takes care of the first million or so of wealth, and the sale of the company for 20 million can happen completely tax-free using the EOT, and I'll come back to that later. We also get involved with annuities because pensions like a SSAS are able to buy annuities, not ones with Legal & General, but your own self-invested annuities, which means that you're no longer the holder of a SSAS. You're no longer restricted to the SSAS rules on what you can and can't do, but you've still got an investment pot. We also deal with special corporate trusts. And when it comes to personal trusts and wills and things, obviously Daniel's your guy for that. So that's just a brief whiz through. Let's look at some more background. For my sins, I was a pensions examiner for the Advanced Financial Planning Certificate for IFAs many moons ago, the G60 exam. I've got lots of different qualifications, quite a learnaholic really. But it's interesting to know what's on the syllabus for accountants, solicitors, financial advisors, and you can see where the gaps are, which is where Elite Wealth Services and my tax work has been quite useful over the last 35 years. Because of my technology business, I'm also able to do chatbots and videos, and there's a free SaaS video masterclass, and that's on the Segmented Solutions website. which is www.segmentedsolutions.co.uk. Go and fill your boots. Like I say, it doesn't necessarily mean you have to do your SSAS with us. It's just background information. What is an administrator? What's a practitioner? Videos apparently are quite helpful, so help yourself. And there's some case studies in there. There's also a video on the top 10 areas of stamp duty as well. So hope that's helpful. From a personal perspective, I'm also quite into my motorbike. So during lockdown, I bought this little rusty thing, which is a front and back wheel with a frame, and ended up with this hand-built show-winning Harley Davidson. It's just to give you an idea that I'm not just some tax nerd. I'm involved with multiple businesses and also engineering stuff, waste-to-energy projects in Australia, turning Aboriginal rubbish into heat for Pilkington, all those sorts of things. And having a business background is really useful when you're talking to business owners, because you've got an understanding of things, understanding of business accounting, VAT, and what it means to run a business. So that's me, that's my background, and I'm always happy to help. My mobile number and email address are out and about. If you've got any queries or questions, please don't hesitate to get in touch. What I'm going to do now is slow down a bit and go through a case study. What we've got here is a situation that involves property and a business. So if we look at the property to begin with in the portfolio, there's a commercial property plus a whole collection of residential properties. So property portfolio, a lot of people are in this situation and they want to know what can be done and what's allowed to be done. So I'm going to put that into the case study. In addition to that, there's a trading business, and the trading business is actually doing something. So it's not just a property company with a bunch of properties in it. This is a bona fide trading business generating profits. And in terms of employing the services of a tax advisor, which is what I do, you've actually got to have a tax problem. So therefore, you've got to be earning profits and need advice on what to do. So first thing we do is get a proper valuation for the business. And that proper valuation draws a line in the sand, because that can value the shares. And it lets us do things with shares. It lets us create new shares. It lets us sell shares, transfer shares, and all those sorts of things. But proper independent third-party valuation is absolutely critical to doing this properly. There are things that can be done. For example, grandparents can buy into the company, and they can actually then gift the shares that they bought across to the grandchildren. And the reason why we get the grandparents to do this is because if they do it, it lets the personal allowances of the children be used so that they can be paid dividends each year tax-free. So what you can end up with is a couple of kids getting $12,500 a year, obviously spending it on sweeties and inappropriate toys and things, but by the time they reach 18, they're probably not going to have any student debt, or they're going to have money for their own deposit on their own property, all accumulated tax-free in their own name via a trust set up by the grandparents to hold those shares. The other thing we can do when we have a valuation and we know that business is worth a particular figure is we can look at things like new shares going into a QNUPS, a qualifying non-UK pension scheme, because QNUPSs do not pay any tax on dividends received on shares, and they do not pay tax if those shares are sold. So although individual human beings have got their, I'm going to call it the entrepreneur's relief, but it's changed name to business asset disposal. But you know what I mean. You've got £1 million where you pay 10% tax. Anything above that, you pay 20% tax. But a QNUPS pays no tax at all outside of your estate for inheritance tax, and you can draw a pension and also tax-free cash from the QNUPS. So it's an alternative to a SSAS. Quite often they work together. Okay, so we've got the situation where the trading company acts as the sponsoring employer and establishes a SSAS. Now, in this particular case, it's one SSAS in the name of 4 different members. So they are the members and they are the trustees. If those 4 were completely unrelated, you might actually wish to set up 2 SSASs, one for Tom and Jane and family, and one for Peter and Alison and family. But just to keep it simple on screen, we've got the sponsoring employer setting up one SSAS with the 4 members. We've also got the portfolio sat in the background, and we've got a commercial property, and we can actually move the commercial property into the limited company as a director's loan. Now, that does 2 things. Firstly, it stops the individuals who owned it from being taxed on the rental income. So that reduces their exposure to personal tax. Secondly, it means that the limited company owes them the money because it's a director's loan in of the value of the property. So that alone starts to make a bit of a difference. However, the sexy bit is actually using the commercial property as a contribution, not a monetary contribution, but a property contribution into the SSAS. That gives the limited company tax relief on the bricks and mortar value going into the SSAS. And of course, the SSAS can receive pension transfers from one or all of the four. So now you've got a SSAS with a commercial property. The commercial property in the SSAS would be rented back to the limited company. So the limited company would not only get tax relief on the bricks and mortar, but they'd also get tax relief on the rent. And the rent would accumulate inside the SSAS without any tax, and it would be for Tom, Jane, Peter, and Alison according to what was agreed between them as trustees. So if the property was being held individually and individuals were exposed to income tax, now they're receiving it in their own tax-free pot. There's a stamp duty issue here because we've moved a property, and there's an exemption that allows that to happen without any stamp duty being paid. And if anyone listening to this has moved property from a limited company across into a pension, whether that's a SIP or a SSAS, and they paid stamp duty, please get in touch because we're there to reclaim that for you. VAT is another issue. Most people get it wrong. A SSAS is not allowed to trade. It's a pension, not a business in that sense. So you can't just rock up to HMRC and say, I'd like a VAT number. It's a bit more of a complicated process. And with tax being digital these days for all VAT accounts after April this year, you have to have software. And the software needs to be told that it's a SSAS, but the software doesn't have SSAS on the list. So you have to put it down as a trade or an association, because those are the only structures that don't have a unique tax reference number. Don't put it down as a partnership on your software because it'll ask you for the partnership UTR. I'm very fortunate that I've got my backup in terms of VAT expertise, and we do a lot of VAT registrations for SSASs just to make sure it's done correctly. So if you're buying a property and it's involving a SSAS and you want to get any help and support, that's something that we can do, irrespective of whether we look after your SSAS or not. Lifetime limit, a lot of people worry about the lifetime limit, and there's a number of myths. They think that, well, when I reach 55 and I draw money, if my pot is worth 2 million, I'm immediately going to have to pay tax. It doesn't work like that. It works on each year you draw down from your pension a bit that you've crystallised, and if you've crystallised 100,000, then you've only used up 10% of your lifetime limit, even if your entire fund is 5 million. So you can chip away at your lifetime limit. It's not quite as draconian if you do it properly. However, we can get a bit of lifetime limit support into the SSAS using things like QNOTs. In addition, this is an aside really, funerals, there's a lot of things going on in the market. Companies are going under in terms of funeral plans, but some of the companies actually have money behind them. And there's one particular company with money behind it that offers funeral prepayment, and they've just launched one that's compliant for SIPs and SSASs. So if anyone has a SSAS and they want to use pension money, which tax relief has been granted on, to pay for their funeral in advance, then that's now possible. Just get in touch. Anyway, back to the residential portfolio, because that's obviously quite an important thing. Many, many tax opportunities for planning. And again, we've got technical support in terms of incorporation relief and also in terms of stamp duty. But if you want a SSAS to get involved and you've got residential property, whether that's you want to buy new residential property or you want to move existing residential property across, you want to sell it off, we can use a REIT, which is a real estate investment trust. And that real estate investment trust is effectively subscribed to by the SSAS, but it is allowed to hold residential property as well as commercial property. So your property strategy doesn't need to just be constrained to commercial property. So if you're in the situation where you've got money in your SSAS and you want to look at properties, and it's a decent amount of money because these things cost to set things up. There's no point thinking, oh yes, I've got 20 grand in my SSAS, I'd love a REIT. And so, well, you'll have no money left to buy any property with. So These are big boys' toys, and if it's beneficial, they're available. And a REIT can also issue shares to QNUPs so that growth within your property portfolio can fall outside of the lifetime limit into your QNUPs. But again, those things are very specific and they're down to the circumstances. It's difficult for me because people say, tell us about tax planning, tell us about the structures, tell us about the things. And it's a bit like going to a doctor and saying, tell me about medicine. I could be here for 7 years. I rather ask, what's your circumstance? And after an hour and a half of drilling you about who owns what have you got, I can then say, right, what you need is one of these, one of these, and one of these, and this is how they would be set up specifically for you. But I'm trying to give you a flavour that there are tools and toys out there that can be utilised, and that's why we have an advisory company and a SaaS company, because as a SaaS provider, we're not an advisor, we're just a provider. It's a bit like we can tell you that you've got a gun and we can tell you you've got the right bullets, but what we can't do is be held liable if you blow your own feet off. That's where you need to get proper professional external advice. So there's actually a huge difference between a little bit of technical knowledge being passed backwards and forwards to guide you versus formal advice. Okay, so now we move on to the business itself, and actually this is the more important bit of planning because it's bigger than a SaaS. But here we've got a situation where they can sell their shares for 18 million, which they do. And they don't sell them to a stranger on the street, they sell them to a special type of corporate trust called an employee ownership trust, or an EOT. You need to have enough employees because it's called an employee ownership trust. And for every 2 owner directors, you need to have 5 independent, non-connected employees. So a proper business with proper employees, with a decent valuation, we can sell. Having said that, if the business is worth 18 million today and they think it's going to be worth 200 million tomorrow, then they might not want to sell it. If it was worth 18 million today and it's fairly stable and mature and they don't think it's going to go through the roof, then now's a good time to actually get that done. The 18 million that they receive is, in a lot of cases, an IOU because nobody has got 18 million sat on the table ready to pay them out. And this is where you can get finance. So if the company is established and secure and stable and it's got a decent trade to it, funding can be raised internally within the company so that some part of that 18 million is cash in the company's bank account so that it can go across to take care of some portion of the sale. Again, they'll receive that money tax-free. Next, we need to look at what happens in the longer term because although the company's been sold for 18 million, if they were only to get 1 million each because of financing, that still leaves them a shortfall. So the next slide will explain what happens with the shortfall. Assuming that there were £400,000 per annum of dividends available, the money would be paid by the limited company up into the trust, and that trust would make the payments out to the individuals who were owed the £18 million, i.e. the 4 shareholders. No longer shareholders, they've sold their shares. So in year 1, 400,000 paid out tax-free, and year 2, 3, 4, 5 to 10, each of those people will be receiving £100,000 a year. They don't pay tax on it, so there's no income tax, which means that their only income will come from elsewhere in terms of tax, which means they might not be a high rate taxpayer at all anymore. In fact, they might be a non-taxpayer because whilst they've sold their business, they can still be directors and they can still be running it, and they can ask the company to make £40,000 of pension contributions for them. They don't need it personally because they're getting £100,000 a year tax-free, but this is a nice little thing. When you sell your business, you can say, we'll carry on running it, you've still got to pay us, and we've decided that we'd like to receive our payment in the form of £40,000 a year into the SaaS. Also at the moment it's quite useful because people's energy bills are going up and employees, whether they're new ones or whether they're existing ones, can be paid a bonus tax-free if you've sold the shares to an EOT. So money that the company has from profits after tax go up into the EOT, and that money can be used in a variety of ways. And one of the ways is to declare a bonus, which is very useful these days. It's also a positive thing. People will actually appreciate the business and from a marketing perspective and from a recruitment perspective, it has all the bonuses there. So that is a bit of a case study. I've got a quick whiz through chucked a few things in there, and I'm hoping I didn't blow your minds. I'm not giving you all the details because we would literally be here for a very, very long time. Everything I do is driven by the client scenario, rather than me saying, here's a blue one, let me tell you the nuts and bolts of how it works. There's no point me spending 4 hours explaining how something works if you're never going to be in a tax position to use it, or if you're never going to be in a position where that particular structure is affordable to you. So that's why I start saying, tell me about your scenario, tell me about what's going on. And this brings me to my client pathway. I do a number of professional briefings and training courses for accountants, solicitors, IFAs. I love speaking to business owners because what they do is staggeringly brilliant. They put their whole life on the line and step out and do something. So many of them have been so successful, they've outgrown their accountants, they have a relationship, but that relationship is just do my accounts rather than look at planning. We operate outside of that. We sit down and say, right, let's have a consultation, and we will actually sit and talk for as long as is needed to identify the tax planning opportunities. Once we've explained that there are opportunities, we can be formally engaged and a tax report delivered. For our engaged clients, if a SSAS is needed, we've got segmented solutions and we can actually provide that for free for them if they're engaged at a certain level. And then the implementation happens, and that could be over a period of years because it depends upon the valuation and where we're at. So there you have it. That's me, Paul Stewart from Elite Wealth Services and Segmented Solutions. We do tax advice and SSASes. I've got a smart business card there, either the QR code on the right or the paul.mysmartbusinesscard.co.uk. In there, you'll have all the training videos. Segmented Solutions also has all the videos. Or if you go into Google and type in SSAS Masterclass, funny enough, we come up quite high on Google because I've got a digital marketing company that has put little bits and pieces into the videos to tell Google, put us up on the first page, please. Anyway, that's me, that's what I do. A number of toys and tools that are available, and more than happy to talk to you as and when the need arises. Thanks ever so much, everyone. Take care. See you all again soon.